Renminbi Internationalisation, controlled interest rate, stable exchange rate, and free capital account? What can we expect?
Appreciate a like if you like this video and do subscribe to my YouTube channel.
This is just a recap of what I done in previous video because understanding the equities market in China and Hong Kong will give a glimpse of the renminbi exchange rate as well. Renminbi depreciation, a cause or consequence? Do you think true? This is a very important point. Renminbi was so strong in 2014 at 6.1. But good days didn't last. Too strong renminbi isn't good for export, as all of us know that. USD renminbi breaks above 6.2 and tested just below 7, and markets weren't too comfortable with it. That was the period very close to Trump election. USD weakens after April 2018. Trump was appointed as US President in January 2017. Renminbi actually depreciates a lot and goes above 7. The market doesn't like a sudden change in renminbi, but trade war did burden the renminbi. Can China really liberalize its capital account? Control over domestic interest rate? Control over exchange rate? Nope. It says that to have control over domestic interest rate and one's exchange rate, a country cannot have a free flow of capital account. That's having free flow of capital out and in of a country. But what's capital account? It's defined as net flow of investment transaction into an economy. Now, will there be a greater mobility of capital in and out of China? You see that China's central bank announced recently, back in May, that they are restricting the amount of reserve that the financial institution in China can hold in terms of foreign currency deposits. Why? So they are worried about the sudden, very strong strength in renminbi. So having higher reserve for foreign currency deposit will reduce the foreign currency supply in the market, thereby providing a kind of a support that China renminbi will not gain so fast. Despite the trade war, China exports were still up in 2020. Why? China is important to the world in terms of the exports of the goods and services. Look at these numbers, it's going up. And in 2020, China exports was 2.723 trillion to the whole world, going up. US imports in 2020 only dipped slightly. US goods imports from China total 434.7 billion in 2020, only down 3.6% from 2019. But over the last 10-11 years, it's up 19%. China export as a percentage to its own GDP. It was initially up to as high as 35%, but over the years since 2010, export as a percentage of GDP came down. Well, could be a case that internal domestic assumption is going up as a percentage of its own GDP. China foreign reserve more than 3.2 trillion USD. Relative stable above 3 trillion USD. Look at China's forex reserve. It rise in October 2021. But is it enough? A question to think. Look, China is sitting on 3 trillion in reserve currency. But is it enough? This is a question that has been raised more than 3 years ago. And Asian currency reserve as a percentage of GDP, China has been above 40% for a long while, but it came down over the years as a percentage of GDP, going down to around 30% in 2017. I didn't compare the latest number, but it's definitely coming down slightly. The question to really think through is this good or is this bad? Is China Renminbi Internationalisation working so well that China is now not keeping so much other currency as a reserve? Renminbi is still a small portion of global reserve. Look at this. Renminbi is still only 311.9 billion of reserve is in Chinese Renminbi by records kept in World Bank. Nevertheless, we know that demand for USD fall to lowest share in 4Q 2020. It's coming down from above 70%, it's going down to around 60%. So is renminbi strength the reason why China is not keeping so much foreign reserve? that could be a possibility, and it's just keeping around more than 3.2 trillion of foreign reserve. And the trade tension between US and China a bit. Another question to think through is, what is USD Renminbi equivalent price point that PBOC can accept? Renminbi has been appreciating to around 6.39 to 6.4. Is it anything from 6.25 to 6.4 being the acceptable range that PBOC can accept? Now China is definitely in a better position compared to 2015, 2016. Shanghai index then was 5,000 points, like what I highlighted again in the early video. Now Chinese markets are relatively stable except for Hong Kong equities and Chinese tech stocks in the US market. But well, 2021 is definitely not 2015. China has stepped up a lot of efforts to open up its financial sector to bring in foreign investment. The crash in Chinese equities market back in 2015 made the launch of QDII2 difficult back then in 2015, which is allowing Chinese citizens to invest overseas. But now the time is right. Chinese authorities are very good in managing the whole market, so they can avoid a crash right now, because the crash in Chinese tech stocks, in Chinese equities, have already taken place. And Renminbi right now is actually relatively strong, with opening up financial markets and allowing more foreign direct investment into China and more initiative to open up China financial markets. The time is really right. China, the master chess player. Financial reform met challenges back in 2015, now tech regulation. Just a quick recap and what I shown in previous video. I won't go into details, just look through and you can look at my previous video if you want. China likely to allow its capital account to be more mobile as compared to the past. Why? Because I do expect China to allow Chinese citizens to invest overseas in 2022. Look at the previous news. I highlighted this in my previous video. Do look through if you are keen. Another point is QDII2 pilot plan were discussed back as early as 2013. But remember that the financial market crashed in 2015 for the Chinese market, making it very difficult, and Renminbi was very weak then, and that didn't give a lot of foreign investors confidence in Renminbi asset. So the capital account is at a very sensitive period back then. Now isn't, remember? Now Renminbi is very strong at around 6.39 to 6.4. We have to think through what is the equilibrium price point. But now I do believe China is in a very good position with equities market not overvalued and Renminbi at its relative strength, and export is going up as well and increasing its own domestic consumption as a percentage of GDP. China is in a very good position to allow the citizens to invest overseas in 2022. Chinese tech stock and Hong Kong equities unlikely to have a sustained recovery until regulation on overseas investment are out. Patience is therefore required if one is investing in China and Hong Kong stocks right now. As always, this should not be construed as any investment or trading advice. Do stay tuned and subscribe to my YouTube channel so that I can be kept updated promptly when I release new videos to reflect the changing market conditions.